Hello everyone, and welcome to the PivotBoss Monthly Market Outlook for January 2025 and for Q1 of 2025. Thank you very much for joining me here today. Today we're going to be covering a ton of charts here. I have posted the watch list here in the chat. Let me know if you've gotten it. You should be able to see it right now. That's going to be the general list that we're flowing with here today. There could be other stocks as well as we talk about industry groups, but that's going to be the general list here where we have some actionable ideas to work with as we head into the rest of the month and into Q1. As always, if you have any charts that you would like me to take a look at, please be sure to add those to the chat. So if you have anything specific you want me to look at, put it in the chat right now or at some point here during our session, and I'll be sure to get to it when I have a moment. So looking forward to today's market outlook. It's our first of the year, and we're looking forward to getting started with this first one of the year, and also keeping a regular rhythm of these monthly outlooks to be more monthly. So looking forward to that as well. Overall, very bearish here to begin the day. This is the flow of the day that we had today. Just for a quick, brief, kind of broader market look, we had the early overnight push to the upside, and then that was quickly met with selling pressure here. A heavy hour of selling pressure. That was the 9 o'clock hour here Central Time, and we saw selling pressure back to the previous week's midpoint in both the ES and the NQ. The YM dropped off of the 43,200 level and dropped through the previous midpoint and saw additional selling pressure to lows of 42,652. And we could be looking at a follow through to the previous week's lows over the course of the week. So in both the ES and NQ here, these could be targets that are reached here over the next 1 to 2 days, and the YM could reach this downside target as early as tomorrow. So we could have additional weakness up ahead out of these markets. Now, for those of you that are routinely in our trading room, we had this as our playbook here for today, Monday afternoon. On Monday afternoon, we noticed that there was an 8-to-1 ratio of sell candidates to buy candidates on our wick reversal scans, and that high of a ratio that skewed one way or the other would tend to give you directional conviction for the next session. Additionally, the YM here had the best rejection yesterday. You can see the rally and rejection by the end of the day, and that was the one to watch today for a retest entry after any morning strength. Morning strength was likely to be sold for an inverted checkmark move down, and today that played out perfectly in line. Now, before we get to any of the main charts that are on the watch list, I'm going to start out of order for a moment. Hey Gordon, good to see you. Welcome. The first chart that we're going to start with, because it's going to set up the entire session here, is NVDA. And again, I know for those of you that are in our trading room, this is going to be a little bit of a recap because this is how we started the day today. Right away this morning, we noticed how NVIDIA had sold off this morning. Heavy selling pressure. It had gapped up, new all-time high, took out the previous quarter's high right here, which was also the previous year's high, and began to drop. And when I initially saw it this morning, it started to push down through the previous session's low, and it became an outside day very early in the day. I mean, right basically at 9 a.m. Central. So 30 minutes into the session, this thing goes outside day. And I noted to our group how this is starting to look like a day one rejection in NVIDIA. And that type of day one rejection doesn't tend to, the stock doesn't tend to bounce back once it embarks on a day one rejection of that magnitude. It normally follows through, it normally holds on lows, and it normally closes on lows with a high range day, and that is exactly how it played out here today. And so this thing eventually went on to hit the 140 level. Today's low, 140.01. It's a 281% of ADR day. 200% of ADR day is huge. What that means is that today's range, today's price range from high to low was nearly 3 times its normal average range. Its normal average range, as you can see right here, is $5.27 over a 10-day period. And on a 5-day period, it's just over $6, $6.22. So today's range here, $13. That's 281% of average. Anytime you have over 200% of ADR, and it's the first time that you're seeing that in a while, that is usually indicative of increased volatility to come over the next 1 to 3 weeks, and it usually coincides with weakness over that period of 1 to 3 weeks, sometimes longer. And we have precedent for that in NVIDIA itself. Over the previous year, we had one of those days right there, and in the trading room that day we marked that as a day one high, and it ended up being a day one high and didn't come back through that high until many months later. It embarked on a correction of about 4 or 5 weeks here, bounced off VWAP and rallied. And then right here we marked that as a day one high as well, and we compared it to the similar high that had happened earlier in the year, and that one ended up being a high that did not come back through that level for a period of months. The pullback after that was about 7 weeks, and that culminated with the August 5th low. That August 5th low was right inside our buy zone as well. We had anything into 95 to 90 as a buy opportunity that day, and that was the second time it had bounced off VWAP that year. And of course, after we got that day one high on those 2 rotations, it took a while to come back and fill those highs. So what does that mean for the current day's high? Very similar situation here, only this is much more significant in its range. Now keep in mind, back here that range was much higher than today by raw numbers, but when you looked at, we split here back in June, comparatively speaking, today ranks much bigger in terms of the numbers there. So this was not a what is that, a 10-point day that day. This was like a 100-point day that day. But comparatively speaking, this is much bigger here based off of raw price range to the split date. So big time day one high. How long before we take out that high down the road? And what does that mean for the potential correction to come, and what does that do to the broader market as well? That's going to be a big question here that we'll be answering here in this market outlook. We're starting with NVIDIA because this is the one that kind of started the party to the downside right now. We had the initial rejections yesterday, especially in the YM and RTY, and those played out beautifully. We also had a rejection in Microsoft. So Microsoft sold off today, and it was one of our sell candidates heading into today. So some big tech selling off and leading the way to the downside. We'll look at some big tech today. So on the docket for today, we have a few Magnificent 7 stocks. So if I bring over our working watch list right now, this is the one we'll be working off of. We're going to go off of some of these futures to begin, and then we're going to look at some of the Mag 7 stocks. Not all of them, unless you have requests to do more, but these are the 3 that we'll be looking at with actionable opportunities. We're also going to look at some AI stocks. So in terms of industry groups, we'll be covering AI, we'll be covering space stocks, quantum stocks. We may touch on nuclear, maybe, There's not clear-cut opportunities right there, although that is a group that could be in play still this year. It was one of our in-play groups last year. And then we'll look at kind of some lottery ticket opportunities as well that could provide some high yield opportunities. But lottery ticket plays, again, you got to be careful with because they could be quite volatile. So this is the group that we'll be kind of working off of right here. We're also going to look at crypto-related items as well, in terms of miners and kind of a Bitcoin repository there, the MicroStrategy. So this is the working group right here. Again, if you have any requests, please add them to the chat. We'll take a look at those as well. But this is what we'll be working off of as of right now. So we'll come back to NVIDIA in terms of an actionable play and where this might head. But for right now, we're going to start at the top of the list and just look at the broader S&P. This is the ES right here. And of course, we've had tremendous movement to the upside, not just last year, but over the last 2 years. You can see here if I scroll back 2 years, and if we go back to the Q4 low of 2022, that was the day we said the low might be in. It was a G-squat day. You see that the green coloration right there. So if I zoom in right here, that was a high range G-squat bar outside reversal, and it was a lower low failure at the previous quarter's low. That also had bullish divergence using the PivotBoss oscillator, or perhaps whatever your favorite oscillator may be. And at that moment, we mentioned that this could be the low of the year and could start pushing us back up the way, not only back to the previous quarter's midpoint, but perhaps even higher. And that indeed became the case. For those of you who are PivotBoss Masters members, this right here, that technology comes from our PivotBoss Masters resource section there, and it has been one of our favorites to use over the past year, and since it's been created over the last 2.5 years. Over the past year, it's had some fantastic opportunities here on the pullbacks, for example, right here and right here. Those offered great buying opportunities. This was a recent great buying opportunity there as well, and those were kind of wick reversal, outside reversal, day one rejections after weakness, and those tend to lead to 1 to 3 weeks of strength to the upside, and you can see the kind of moves we've had after those types of days develop. So very, very strong. But the point is, we've had 2 solid years of strength, and it's much easier after weakness or when we're still hanging around near lows to identify buy opportunities. When we've over rotated this far here, it's not as easy. You have to be a little bit more patient of opportunities because there's now a lot more risk when you're at these price levels, right? Buying 6,000 here is not like buying 5,000 or 4,200 down below, which was a breakout point for us. These are much higher prices, so you have to be a little bit more measured, and at times it's better to welcome a bit of a discount first. And one of the things you'll notice right here is this was our impulse move here down to the August 5th low, and from that key range for the end of the year we forecasted a target right at around 6,100 right there. I think the actual target was 6081. Let me see here. 6089. Was that the target? Yo, it was 6081. 6081 half. And so that from that strong pivot low and that impulse move, we had a target to the end of the year at 6081 half. For those of you in our trading room, obviously you know this very, very well. We've worked off of this one, and all of the various markets that developed impulse moves during that time, that August 5th low for the most part became the low of the year for a great rally into the end of the year. So that one paid off tremendously. I'm going to go ahead and just take it off now because it's pretty much played out and worked itself out, and now it's time to find something a bit newer. And you know, we have a new one right now. It's not quite as big. but it is manageable for right now. So if you're looking at the ES, the key range to use right now is the high on December 16th, and then you have the low right here, and that was like the 20th. That was the 20th of December. So basically you had, that was 1 week. That was your Monday, Tuesday. This was your Fed Wednesday, and the biggest Fed day event ever in terms of raw price range. Massive sell-off to end the day, 2-hour weakness that was unprecedented. And then a hold inside day, and then a strong low after that with a bounce back. That bounce back got us to this key range midpoint, and now we have that key range to work off of. So the point of that is to help provide usable entry points and targets for this market on both sides of the range. So you can see right here, from this key range right here, we have an upside target that can take us as high as 64.61.5, and we have a downside target that can take us as low as 55.68.25. So those are the two major targets. Now, in an uptrending market, you tend to want price to drop down through the key range low, and you want to trap right in here. Right there is the trap point. And as a matter of fact, it lines up with the PivotBoss pivots for the month, and that's why you see this green right here. Green would be where you would trap in reverse, and ideally the best ambush entry would be at 57.91 right here. That's your 25% extension, and then you would make your return back to the key range high and ultimately higher into the upside 100% target. So that would be a flawless opportunity right now for the ES. So that means dropping into 5,800 and rallying to 64.60. That would be basically your best case scenario if you're a bull. If we're going to embark on, 3 weeks of weakness here, or maybe up to 6 weeks of weakness based on NVIDIA's selling day, then we might see a bit more selling pressure out of this range, not just to 5,800, but perhaps we could be looking at a test at the previous quarter's low. The previous quarter's low is right here at about 57.20, and that could be an opportunity to trap at or below the previous quarter's low, say between 56.50 and 5700, and then look to return it back towards 6,000. So it could be about a plus 350 back up to here. And then we could be looking at a follow through to the upside 64.60 upside target. So ultimately, it could be a 1,000 point move, something in that range, if we get a strong enough trap. Actually, it'd be more about 850. So if we drop down into this zone here, and say we get 5,600 in that area, 5,600 up to 64.60, something like that could be a tremendous opportunity. You have a rising 200-day moving average there as well. So how much weakness are we going to see up ahead? At times with these key ranges, especially if they're a bit smaller, sometimes you can see the 100% target hit to the bottom, which would be 55.68, and then you could see it turn around and go get the 100% target to the upside. That would be 3 times the range of the key range. You have 1 time here, 2 times here, and 3 times to the extreme. So that is 1x. This would be a 3x move off of that level if we were to hit it. So how far of a pullback do we get to begin the year here? And that's going to be something that we have to kind of see how it plays out. But the good thing about having a key range like this is it gives you actionable opportunities and entry points. The first zone is to be patient for here if you're looking to buy. And as of right now, you're going to want to look to sell it into that zone as a short-term swing lower. And once you get to 5,800, look for signs of rejection. If you get a rejection at 5,800, there could be a plus 200 to here. So it depends on your holding period as well, your duration of trade. Do you want to be a swing trader, medium-term trader? Do you want to see this thing go higher over the next 1 to 3 months? You know, everybody has a different holding period. But if you're a short-term swing trader right now, tomorrow morning, sell into strength, right? If this thing pulls back, you want to sell into strength for a continuation downward on a one-day basis, and perhaps on a swing basis, you're working your way through the key range low and into 5,800. From a quarterly pivots perspective, I would love to see a test at that key range low right here. So from a quarterly pivots perspective, would love to see price test the key range low and trap somewhere right there. So if you're asking me what my preferred entry zone would be, it would be somewhere right here between 5,650 and 5,700, and that could provide an opportunity back to 6,000 and up towards 6,200 and beyond down the way. And you're right, Dwayne's right on the money here. There's a naked FOMC key level right there from September 18th, and that's 5,700 and a quarter, and that would coincide with the 50% extension of the key range and the quarterly low. So that right there would be an opportunity to be in from a quarterly perspective. So that could be a quarterly buy. Sell it down into that zone or sell it down initially, and once it gets below 5,700, it could be a buy back to the quarterly high. And in the best case scenario, by the end of the quarter, which is March 31st, we could be outside quarter up. So down and then up, that's outside quarter up. So that's your playbook right there for the ES from a bullish perspective. From a bearish perspective, again, it's a short-term swing move down. The fact that, you know, we had this massive day one rejection with a 200+% of ADR day. As a matter of fact, that was like a 500% ADR day. That was a day one high, and so far we've managed to stay below those highs. It's still showing increased volatility here, and that increased volatility could pick up, especially on NVIDIA weakness. So those are some thoughts right there for the ES. Now, it's only Tuesday. It's only Tuesday, so I hesitate to talk about a weekly chart on a Tuesday. But we're going to talk about a weekly chart on a Tuesday. And basically, it's the failed new high that developed here yesterday and today. And we're knocking on the door to last week's midpoint, but a failed new high can tend to be a very bearish indication of more weakness to come over the next 1 to 3 weeks or more. So that could be very, very bearish here. Of course, we still have 2 more trading days in the week, Thursday holiday here, and again, we could be looking at a test right into that quarterly low. That could provide a tremendous opportunity. One thing I mention to our trading room very often is in an uptrending market, we rarely hit a quarterly low. You can see right here, it was not hit, was not hit, was not hit, was not hit. You just don't tend to hit it. But look, it was hit here, and that trap right there to the high gave us an outside quarter up. And if you go back to the monthly outlook back here, that's what we were looking for heading into October. We were looking for this thing to drop down and go outside quarter up in Q4. That's the play that we're looking for this time around. So this would only be the second time it's hit the quarterly low in an uptrend since back in Q4 of 2023. Now we hit that quarterly low here. That's what we pointed to a little bit earlier, but that was in the midst of the downtrend. So there was a big downtrend that was preceding that year, and so that's a little bit different, but that was also a great buy opportunity as well. So if this thing does hit the quarterly low, it could be huge. If it hits the quarterly low and can't bounce, things could get very, very ugly very quickly. So some thoughts there. Now, the next one on the list is the NQ, and we're going to go a little faster here now that we got kind of the baseline analysis done for the ES. It's going to be almost copy paste for the NQ and YM and RTY. But again here, that's your massive key range that we developed here in the first week of August last summer. And right there, it hit the 100% target. That's your key range target right there. That was our end of year target, and we reached it, so that was money. So again, if you're in our trading room and been around since last August, you knew that target was in play since about August 5th. August 5th, on that low, we knew that we had a key range here, and we knew that that target was going to target the upper level up here. We finally got it by the end of the year, and since then it took it offered, bounced off the level and dropped. It gave us a new key range as well. So we have this key range to work off of, and that key range is going to point us higher to the 23,000, call it 900 level. 23,900 will be the upside target for the NQ down the road based off of this key range right here. But we likely have some weakness still yet to go. So it's not like it's going to go from this point to here. It might be better than that, because we might drop down further. We might go down into 20,300. We may drop down into the quarterly low. The quarterly low from last quarter is going to be the home run entry here for this market, because it's also going to coincide with, again, a quarterly low in an uptrend, and we know how bullish those can be, and it's also going to coincide with a rising 200-day moving average and the 100% target from this key range. A lot of confluence in that area, and like Dwayne pointed to just a bit ago, we also have a naked FOMC key level there as well from September 18th. That's that level right there, and it coincides perfectly with the 200-day moving average. Right now they're about, I don't know, 12 points off? No, 2 points off. Oh, accidentally clicked on the wrong chart there. Let's go back over here to the NQ. That level right there is, looks like 02. Oh, it is 12. So they're 2-point differentials, so they're right on top of each other. So 4 points of confluence there at 19,700. 19,700, you're going to have a lot of points of confluence. Can we get down to that low to begin the year? That would help reset the charts, help reset kind of the value of a lot of these charts, and then from there it could be a trap and reversal back up, and maybe in the best case scenario by the end of the quarter we're back at 22,500 off that low. That would be a 3,000 point move off the 500 level. 700 would be an early entry. So does this thing drop somewhere between 5 and 7 up to 22.5 over time? And then of course the 23,900 would be the key range target from that impulse move. Now this may look like a far distance to travel, but when the market starts to sell off and discount, it can get there in a hurry, right? It can go fast. We've been in a very bullish market, so it doesn't last long. You got to find the discount, pounce on it, and be in. But there can certainly be some weakness that happens to that target, and that target could provide a tremendous near-term buying opportunity that could play out throughout the course of the quarter and the first half of the year. And in some cases, it could play out over the course of the entire year as well. Again, if we go back over the last couple of years in this uptrend, we've only tested the previous quarter's low once, and that was here. Tested the previous quarter's low and went outside quarter up. That was last quarter of 2023. So Q4 2023 outside quarter up. Can we get a discount? Can we find a low? Can we go outside quarter up, or at least recover off those lows? And that would be in line with the uptrending market as of right now. So that's the NQ right now. Again, would be nice to see a bit more of a discount and flush it out so that you have an opportunity to buy it back cheaper and rotate this thing higher. Notice how prices responded to the 200-day moving average. On a bullish slope of this magnitude, the 200-day moving average can tend to be a great opportunity to defend. So that's the NQ here. The next one on the list right now is the YM. Now the YM looks quite a bit different than the others. This one has embarked on a 5-week pullback already. This one in RTY led lower and continue to see, you know, signs of weakness up ahead. Now this one did give us a key range. It's given us a couple of key ranges. You know, there's this one here, impulse move up with a pullback to the mid, and the recent high up here was a box reversal, and that box reversal has led us back down. Very aggressive move. Box reversal at a key range high is one of my favorite patterns. Yesterday, strong wick reversal, squat bar as well, downward sloping bearish Pima trigger zone. So today we were looking for morning strength to be defended in this zone here and for a rotation down toward the 600 level. It's played out very nicely. So we had 200 to 600 as the potential range for today, and that's a really solid move. That's a really solid move that this one kind of played out on per our initial analysis yesterday afternoon. But do we see additional weakness from here? And I think we do. I think again, this one has led lower. The other markets are starting to discount now. There could be an easy continuation, maybe not all at once. I mean, after some selling pressure like today, there can be a bounce back day. You know, there can be a fade after trend day down, so we could certainly see a bounce back day. We could even bounce it back as high as the previous quarter's mid and then drop proper from there. So it may not all happen just tomorrow. And anything can happen there. And sometimes, you know, again, we have the observance of Jimmy Carter's funeral, memorial, and all that. Sometimes there can be a little bit of a patriotic rally that happens on something like that. So we'll see. But over the course of the next 1 to 3 weeks, there could be additional weakness up ahead. Now for this one, the previous quarter's low is going to be the opportunity again. And if this is your first time looking at previous quarter's lows, these are the PivotBoss pivots. And the PivotBoss pivots, I believe, are the best out there in terms of pivots. There are a lot of great pivots that you can choose from. If you have my book, Secrets of a Pivot Boss, you know I discussed the floor pivots there, classic floor pivots. I also discussed the Camarilla pivots as well, which we use in the trading room as well. But these are what I call the PivotBoss pivots. And they're based off the previous high, low, and close, and the previous midpoint as well. And then from there you have classic extensions off of those levels that are based on you know, regular, quote-unquote regular math intervals, 25, 50, 75, 100% of extension or beyond if you need it. And it's uncanny how a previous high-low close or midpoint can be the most important levels on the chart time and time again. And so in an uptrending market, as we mentioned in the first two charts here, the previous quarter's low can tend to be the best spot to trap and reverse. And Q4 of 2023 was the only time we tested it. Kind of needed 2 rotations there before it went lower low and outside up. Can we go get that quarterly low here? And it's not too far off that level after discounting already enough. We could be there fairly soon, but there could be a gap fill down even lower. There could even be an FOMC key level from the summer. So you have this gap fill right here that could be in play, 41,500. You have that FOMC key level right there at 41,240. And this right here is your previous quarter's low. It's also that key range low. A lot of confluence here in this zone of the chart, a rising 200 here as well. So again, when the Dow wants to get moving, especially to the downside, it doesn't take long. Today was a great down move off of our initial sell zone today, but it was only 560 points of range, which is not bad because it's been averaging that on 5 and 10 day basis. That's your 10 period average, that's your 5 period average right there. So it's right in line, 93% of ADR. But a high range day would be somewhere between 800 and 1,000 points of range. That's a high range day. You can see back here, all of those days were at least that and then some. That day right there was a 1,500 point day. This was the day after election day. That was a 1,500 point day. This thing can move when it wants to. So if we did break, it could be in this zone down here very, very soon. Now, where's the best spot for an entry? You know, depending on how much of a pullback we get, can we get to the 200-day moving average? Clearly, we got to get through the key range low and the quarterly low, and the 25% extension would be right around 41,083. So 41,100, 41,000 even, somewhere in that zone could be a great opportunity for a trap. And as soon as price is able to recover the previous quarter's low, that's when you start to make your move back to break even on the year and maybe start to flow higher as well. So again, still need perhaps a little bit more downside ahead for some of these markets. And you can also note, not the prettiest, but kind of a head and shoulder style pattern here. Higher high rejection, lower high on the right edge, and maybe even an expanding range that's developing. So got to get one more leg down in order to bring this thing back to the upside. On the equity futures, we'll end here with the RTY, and then we'll start into some commodities. RTY was a sell candidate as well, right here for us yesterday. Great wick reversal, a failed new high, rejecting the previous key range high here. This was the only one of the four that didn't get the 100% target, but it also had the widest impulse move of the bunch. That 4-day range right there was easily the biggest 4-day range we've seen in the last 5 years. And from that low, though, we did manage to get a new high, but more downside ahead. For this one, you have your 200-day moving average and your previous quarter's low here, and you have your year-to-date closing VWAP here. So this is last year's finishing yearly VWAP. Right in this zone could offer a great trap opportunity, but I think even the LVM below perhaps is just a bit better. 21.25. Can we get down to about 21.25 and start to make our move back up the range? Is that going to be enough of a pullback? Again, if NVIDIA is embarking on a 1 to 3 week pullback, or maybe as much as a 6-week pullback, then this chart could get hammered quite a bit more, and it's just anybody's guess as to how far it can go based off of what we have already seen. So that tells us that we've got to at least be patient and let this thing go take out the previous quarter's low before we decide to be long. Again, tomorrow, any morning strength could be sold, and we're looking at weakness that takes us lower for the day. Right now we're averaging 44 and 42 on a 10 and 5 day split. So that's kind of what we're looking for tomorrow, somewhere between 45 and 50 points of range. Today was 52 points, 110% of ADR. So between 45 and 50 points of range tomorrow on the downside could be in play, especially if we see additional selling pressure ahead. So that's a quick look at RTY. Yeah, so right now the trading view indicators that we have are the ones that are available. I do want to add some additional indicators here, and I'm looking at which ones to make available right away. I've had interest for the Camarilla pivots indicator, and also a revised version of the bands. So for example, this is the PivotBoss bands right here. By the way, welcome Trader XV. These are the PivotBoss bands, And at the time that the TradingView indicators were developed, there wasn't a great way to create an end-of-day version of those bands. Instead, it's only available as an intraday version right now, but I want to get that indicator updated to an end-of-day version so that you have higher time frame bands as well. So some of them are right in line. This one should be fairly similar. That's your ADR indicator, and then there's others as well. But there are going to be more added, and also would like to get some of them updated. Some of the ones, like for example the squat bars here, I don't believe those are yet available for TradingView, but that's something I do want to add as well. So there's more work to go for TradingView and also for NinjaTrader 8. Those have been the big two platforms that have been requested for some of the newer items that we have. So I'll be making those available ideally this year. And really was looking to try and get those added in Q4, but just didn't get around to that. So we'll have those ideally earlier this year. That'd be a Q1 objective there. Now here is GC. Here's GC. This one right now very much compressed, and again, this one has not really provided a whole lot of juice here lately. It gave us incredible movement over the last year of trading. It was the most bullish I've ever seen gold ever. And we had some big time upside targets on this one that were all met and exceeded. So once you get gold moving on this magnitude, there can be a time here where you kind of go sideways for a while. This one can tend to rally and go sideways, or drop and go sideways. And these are the last 5 years, and you can see big time movement to the upside, and then multiple years kind of sideways within a large range. A trap here and rally, then sideways for multiple months, then rally, sideways for a few months, rally, and now sideways. So this is kind of in line with the personality of gold. So right now gold's been tough because it's just been back and forth within the middle chop of this range. We do have a broader range to keep an eye on. There's a couple of key ranges that could be in play here as well, but first, the major 2540 level, that's support. You can see the breakaway point there and the reversal here, and anything 2760 to 28 is major resistance, and then you have that middle chop right in this zone right here, and that right there is where we're stuck at the moment. Stuck in that zone, and again, it's hard to do business when you're stuck right there in the middle of that area. When you look at the volume profile here, very unique volume profile where you have this little bit here, you have that bigger chunk there, and then you have this little bit here, and that's basically this, and this represents the extremes, and then you have a very kind of steep sloped HVN in the middle. And that tells you that most of the action's happening right in the middle here. So it's hard to do business in here with gold at these levels. So I would say for gold, you want to wait for a move to an extreme. Whether it's above 2760 for a return back down, or better yet, if it's down to 2540 for a return back up. That would be the best case scenario for gold right now. We do have a key range here, and we have a wider key range back here. I ended up going with kind of the middle kind of sized key range here because that one is so wide that it would be a long time before we see something of that size materialize. But based on how wide this range is right there, again 2540 to 2800, it would not be surprising if we stay within the boundaries of this range for the foreseeable future. Still with an upward bias. I can't see gold really dumping tremendously. Although if it did drop, maybe it makes a move somewhere back to FOMC key level below or finishing value from last year. That could be in play. The 100% key range target would be 2360 here. But even then, it could maintain an upward bias overall until proven otherwise. So this is a market right here that has a super wide range, and the edges are set for right now. And when something gets so stuck to the middle of that range, that's about the time you get one impulse move in one direction and then bring it back to where it came from for it to get stuck some more. Maybe follow through up here, then bring it back and get stuck some more. And all of a sudden you have a well-defined trading range that is developed over the course of 6 or 8 months or more. So that's kind of how I see gold as of right now. Best opportunity to fade here, especially if you're a buyer. I would say right in this zone here between 2500 and 2525, somewhere in that zone, and you're looking to return it back toward 2650. So that'd be about a plus 150 points there, and maybe a little bit of overage, but that would be the best case scenario for gold up ahead. Now, looking at crude oil, this one right here, we talk seasonality with this one a lot. This one works really, really well with seasonality. For those of you following us in December here and in Q4 in general, on that rally we called this a day one high and a Q1, or rather a day one rejection for Q4, and noted that we would drop into middle of December. And in the middle of December, we would finally rally into the end of the year, and then we would likely start the year strong. Seasonality would tend to take this thing higher into the first 9 weeks of the year. So you're looking at the first week of March plus the finishing 2 weeks of last year. It's usually about a 2 to 3 month rally that can tend to take place seasonally speaking. And this is something we called out last year as well. And here's your end of year bounce, and then right here that's your end of, your beginning of the year rally, which actually took us into April. So something similar could play out here. Now today, great failed new low and a strong reversal. Not what was expected initially, especially following yesterday's strong rejection. But I did mention that any pullback could be defended for a swing continuation up. And ideally we're getting a bigger pullback than this, but if this market's going to remain super bullish, we may not. But a pullback into, say, 72s could be a great bounce opportunity into 78.50, and that will reclaim the pivot high from Q4, October 8th, I believe. And then, let's see, that day right there, yeah, October 8th. And then we're looking at the potential here into $80 up ahead. So $80 could be an upside target for crude oil. The other thing we really noted here was this rounded bottom right there. That rounded bottom accumulation pattern, and then you had the kind of the wind up toward the apex of that pattern, the breakout move that has embarked out of that pattern. This looks very, very strong and has some significant upside up ahead. And that upside again could take us easily to 78.50. That was our initial first of the year target here. And then you're looking for a continuation that can take us into 80. And I would say the high end would be 85 or 84.5 in this scenario here. Not really anticipating anything much beyond that area. This market had a big time lid on prices above 85s last year, and that was really surprising. We had a target at 91.50. That was the final target we were looking for, was 91.50, and it just couldn't get there. Got to about almost 88s, so about 3.5 points shy of that initial target. And then after that, it just dumped off of 85 every time. So I think there is a shot longer term to go get to 85s, 84.50 to 85. But that's a target that may not get hit until May, June, July, somewhere in that spot. 4th of July can tend to be a high point here for the market. So looking at 78.5 relatively soon, then 80 and 84.5 up ahead for this market. Buy the dips. Any pullback could be a buying opportunity until proven otherwise. Let's talk some Bitcoin here. Bitcoin with a massive sell-off here today, down 6%. Ethereum down 8 2/3%. When you look at this market, just after the recent strength here, you got a really good head and shoulder feel to it right now. Neckline at about 91K. You have 9,000 here, 110 here. That's a 20,000 point range. Does that take you back downward towards, say, 70,000 down below, and refill through this thin part of the profile? We'll see how this one develops here, but this I mentioned this earlier in our trading room as well. This rally and hold looks very similar to the rally and hold that we began last year with. And once that happened, we got an initial key range here, and I thought there was a good shot to extend it, and it just couldn't and kept going down. Finally, we saw this thing bounce. That the 8.5 low we had as a buy opportunity there, and then we had a massive MGR gap up from a Friday night to a Sunday morning or Sunday afternoon. That was the additional buy. And then we were looking for this thing to really bust through 74K to open up a move into 92,000 and 100,000 to end the year, and we got that move. So we were on this thing really, really nicely here last year. And of course, that all stems back to the initial buy that we had back here. That was in December of 23. The idea was once we get above 18,000, it's going to open up a rally next year to 31.7, and then a shot to go back to 45 to 50. And it kind of played out in that way really, really nicely, but had periods of sideways after that strength, periods of sideways after this strength. Do we see a mature range develop at these highs? That's going to be something that we really need to kind of pay attention to. I would say for Bitcoin, a ton of upside potential still ahead. I don't think it's done just yet. I could easily see a 125 target. We've looked at this thing on higher time frames, from weekly charts to monthly charts, and we could easily make a target out between 130, 125 to 130, and even perhaps higher than that. This key range right here would point you to about 125 and change, a little more than 125, which means that if this thing were to pull back as deep as, say, 80K to 125 would be like a 55% move. So that could be a tremendous opportunity there. If you don't have any Bitcoin, or if you want to add back, then you may want to be patient. Does this thing come back to 75K? That was the breakout point here. That was the market structure edge here. You have 50 to 75 that ended up being a huge 25,000 point range, and now we're at the next 25,000 point range between 75 and 100K. Do we need to come back into this zone, 75 up to 125 by the end of the year? Do we get even higher than that? Is there enough juice to push this thing to 150? Off the 75s, you have yourself an opportunity to really get a huge percentage move into those targets. So somewhere between 75 and 80, if you can be super patient, could be in play. If you want to play the short-term swing, then anywhere in this zone, sub 90K. If this thing dips the toe below 90, You could go 90 to 100 or 90 to 105. That's a plus 10 to plus 15. That could be in play. So basically you're playing this range here, and you're going failed new low back up, failed new high back down, failed new low back up, failed new high back down, as it establishes a wider range. And that's what we're looking for here with an upward bias. You know, once we're at these levels, it's hard to project how far we can go. I know lots of folks can put some astronomical figures in here. For example, I've seen up to $250,000 per coin by the end of the year. That's way out there. And maybe it can, maybe it can't, who knows. It's just hard to buy at these levels and then sit and just pray that it'll go to that level. Instead, again, when you have a market that has matured tremendously in its price like this and perhaps gone over value, it's best to be patient and allow it to pull back, let price come to you, and then look to execute on the pullback for a rotation to the recent pivot high. So that could provide an opportunity to at least retest the recent high. So if that means a short-term rotation here to the pivot high, or maybe it's lower to the pivot high, that could be a much better way to go in the near term. But still very, very bullish Bitcoin longer term. You know, I'm still holding on to mine right now, and even after, you know, this day here I didn't sell, and this day here I haven't sold, and you know, even just trimming a position I had not just yet, and I'm holding from way down here somewhere. So this has been a hold for me at the moment, but I'm not against trimming in order to pick it up cheaper later, but right now just riding the wave until proven otherwise, from a personal standpoint there. Now ETH here, this one was down a ton, and somehow it continues to drop right now. So it just tacked on additional losses, down 8.89%. Minutes ago it was down 8.66%. Big time sell-off. Now for this one, I really like ETH. I really do. Last year we thought that this had a good shot to outperform Bitcoin early in the year, and it actually kind of did right here. On that move it outperformed. It just didn't outperform later on in the year. It was stuck in this range for a long time. Meanwhile, Bitcoin was rallying. Now when price was sitting at 2,400 here, that's when I put out the note that there's a shot here to rally to 3,400 and 4,000 by the end of the year. So that was a massive 1,600 point rally and then some, and it hit a new high for the year, or at least got very close. I'm still holding this one as well, but there could be an add back opportunity in this one. This one has a much better actionable opportunity here that we could be looking at. So that's your strong high right there. You have your strong low right here. That's an impulse sell-off that is significant, especially when you compare it to Bitcoin. It's not as big as Bitcoin's pullback. This is much more dramatic, and then you hit the midpoint there. That's your key range. And again, I know many of you know this this analysis here, but some of you are newer to the room and have not. But that key range points us to 5,200. That's your 100% target right there, and that's 5,200. 5,200 is also our market structure level as well, and it's the next one beyond 4,600. And if you didn't know, ETH moves in 600 point distributions. 600 point. So this right here is a 600 point range. So when I said if it can get above 28, you have 3,400, that's because that's 600 points. And then once it gets to 3,400, it has 4,000 because it's a 600 point range. And then beyond 4,000 is 46, beyond 46 is 52. 600 point range. So this one right now, that impulse move points us to 5,200. But when does it get there? Ideally, it gets there sometime this year, obviously. This isn't like a 3-year projection or anything. This is a key range that's actionable for the first 2 quarters of the year. Can we get there by summertime? That would be the best case scenario. Now, if we're about to embark on a hairy pullback here in the broader market, we could be looking at a discount here in Ethereum as well. And anything into as deep as 2,800 could be a buying opportunity. So any trap below 3,100 into 2,800 could be a trap opportunity. But if you reverse engineer a 5,200 target and cut that in half, so divide by 2, that gets you 2,600. And that was the original breakout point right there. That was the original breakout, day one rejection, breakout move. And notice it's a green bar as well. That's a G squat. It gave us a ton of conviction that day that the move was starting. What if this move right here wipes out that entire move and comes back to 2,600? Again, if you have no skin in the game in ETH and you want some skin in the game, 2,600 might be the level that helps get you off the bench here and into the game, because 2,600 could double into 5,200. And once it doubles to 5,200, take half your trade off, or half your position off, and now you have taken out your original investment, and now the last half of that position is a free trade using market money, and you can hold that for the next 5 or 10 years, or till the end of the year, or whatever you choose to do with it, but zero risk on that afterwards. So that would be the home run entry right now if you're looking for a home run opportunity in Ethereum, 26 to 52. Do we get to that level? I don't know, but based off today's selling pressure, I mean, we could be there within a couple of weeks if this type of selling pressure intensifies. So that's going to be the actionable opportunity here to work with. Now, if you're not looking for a long-term play like that, then this key range is still very actionable. It's basically anytime price gets below this low, there could be a rejection, and you fling it back to the midpoint here at 36.20. So that means, you know, you could reject 3,000 and bring it back to 3,600. That's a plus 600 right there, and you're working with that. If you want to trade the ETFs based off of these ideas and would rather not trade the coin itself or the futures or whatever, ETH itself here is the Grayscale ETF, and you'll notice here it has the similar key range, and you can work off of that. 26 would be right here. That would be similar to the 2,600 level, and that would be a tremendous opportunity off of that zone to go take it higher. ETHA would be the iShares Ethereum ETF, and the 2,600 level would be similar to kind of $21 a share right here in that LVN. You also have this key range that is now in as well, so you could work off of that. So if you don't want to trade the coin, or don't want to trade the future, or whatever the case is, you can engage these ETFs. Hopefully at some point here we'll get options on the ETFs. So that is a deep dive right now in a bunch of the futures markets there. And again, looking back at our watch list right here, we have knocked out these these ideas all the way down to ETH. We started with NVIDIA, so let's go back to NVIDIA right now and talk about an actionable opportunity here. NVIDIA, again, a behemoth in the market, massive stock in the semiconductor game, in the AI game, investor of many different companies as well. And like I mentioned today in the trading room, when this one catches a cold, the market will catch the flu in many cases. And we've seen that as evidence back over the course of the last year. This is a massive day down, as we already mentioned. But what's the play here? Where's the entry? Where are the targets? Number one, this was the key range we worked off of since August. So again, on August 5th, when price hit 90.69 on the low and finished the day at 100, we had the target at 150. That was your 100% target, and it went to 150. And we had that target by the end of the year, and it got there by early November. Key ranges are tremendous. Anybody can do it. Anybody can find these key ranges. And again, they help provide clarity on entry points and targets on both sides of the range. And this key range right here gave us a great opportunity here to take it to the 150 level, and from $100, that was a 50% move. Tremendous. So that key range is pretty much done. It's done. The key range high has become resistance. I can take it off now, and we can work with something more recent. And there's a couple of them, and we talked about this in the trading room a little bit earlier. There's this impulse sell-off here to that low and back up. That's a great key range right there. And we've already seen a trap at the low and a reversal back up. And then there's the one that just happened today where we rally off the last trading day of the year here. That low, MGR gap up to start the day. MGR gap, midpoint gap reversal up. Rally to today's high and then snap back to the middle of that range. That gets us a new key range here. So you can mark either one of those. They're both going to give you the similar upside target. This one right here points to a 172.43 target, and this one right here points to about 174 or something like that. So they're both within distance. Somewhere between 170 and 175 is the upside target here in NVIDIA down the road. Again, if you believe that 172.43 will be hit at some point down the road, you could divide that by 2, and that would take you somewhere into the mid to high 80s. I don't think we're getting to the mid to high 80s, so we may not be getting a double on that, to that target at least. But there could certainly be, down the road here, do we hit 190? Do we hit 200 this year? And there's probably a good basis for that happening at some point. So if we get as deep as 100, then 100 could easily, well, I say easily, but it could provide a free trade opportunity by the end of the year if this thing can manage a 200 print. Now, not sure if that plays out, but from a near-term perspective here, we have a key range in, and if we were to see a push to the downside here, it's kind of in the middle of this mess here, so I wouldn't do a key range bounce here. Instead, I think this market here could take us down to the quarterly low. So we just rejected the previous quarter's high. That's an all-time high. If this is the day one high that's similar to the ones we saw last year, then we could be looking at 3 to 6 weeks down. And sometime in mid-February, we're down here testing the 115s. The 115 level is your previous quarter low, and the 100% target here is 114.53. So great confluence right there. So that impulse move right here points us to that low right there. That's a great, great target. So I think that there is very good odds that that high takes us to about 115 at the very least. Now, as we saw with these previous highs, it took a while for price to come back to those highs. So at what point do we get back to this high? Is it sometime in April, May? After this sell-off, can we get back up by April, May? If so, there's the potential here for like a 40-45% return from something sub 115, 110, call it 110 back to 150 or maybe 160, and now you've returned a pretty good amount off of that. Long term, NVIDIA is still a big player here. Now, on a finishing value perspective, you have this level right there. That's your yearly VWAP as of last year's close, and that's right at 100. The last time it dropped into that area, it slingshot off of it, and of course that was our buy zone day. Anything sub 95 into 90, and it was a flawless entry. Do we get back to that level? Can we get back to that 100 level or even into 90? Maybe, maybe not. Again, with something of this magnitude, it can be bid right back up after a pullback. But this right here was a 7-week pullback. That was 7 weeks, and then the up move was on. So for this one right here, if you're looking for a long-term position entry, anything below the previous quarter's low could be in play. So call it 110. Can it get back to 110 over here? And that could be an opportunity to look for a trap, and you reverse it back to 135. And then potentially, in the best case scenario, you take it back to 153, and now you have an outside quarter up. So that's going to be the theme here of a lot of what we're doing here today. Outside quarter up could be in play for this market. I don't know if we go double digits, but if you're super patient enough and you happen to see something below $100, that might be the ultimate entry to be in double digits here, because if you look up 1, 2, 3 years from now, this thing could be printing multiple hundreds again. It could be 350, 400, and now you've really returned a ton off of an entry like that. So something to keep in mind here is I think that there's a great shot to reach that pivot low here. That would be below the 200-day moving average, and there's a shot to go outside quarter up to retest 153. If it's not by the end of the quarter, then ideally sometime in March, rather April or May. Yeah, that's a good question. Do I see market structure on the NVIDIA chart? And I have not really seen great market structure out of it, like routine market structure levels, because it moves with violence on the upside. You know, it's hard to get market structure when you're just when you're ripping like this, these tremendous rip moves. And so it's kind of tough from that perspective. 90, you know, that pivot low is a good one, but it doesn't kind of line up. You know, you had this pivot low here, but that was pre-split. Again, a different price there. You had market structure before where you had 400 to 500 was great. And of course it blew that away, and then we split, so it's no longer 400, 500. I'm going to have to work on that, Dwayne. I'm going to have to work on seeing, you know, usually I can just look at the chart and it kind of jumps out at me. And right now it's not jumping out at me. If I had to mark something, it might be 20-point distributions, but it's not super clean like we're used to. So say 150, 130, 110, and 90. You know, if I had to, that might be where it's at. And I guess it's cleaner than I would have expected. But 20-point distributions might be where it's at. And that might be where I settle in on. It's not bad. It's actually decent. You know, it rallies away from it here, holds here. You're kind of in here, got a little messy. Back to that lower level, back to this upper level, reclaims this level, back to this level, hits that level there, bounces off of this one. So thank you for pressing me on that, Dwayne, because it looks like 20 points is about where we're at from the 90 level. 90 plus 20 is 110, plus 20 is 130, plus 20 is 150, which means plus 20 is 170. And lo and behold, 172 is our 100% key range target. So yeah, thank you for helping me workshop that. I'll mark those later so as to save time here in the Outlook. But that presents now an opportunity of 110 to 170 then. So if we pull back as deep as the 110 level, which is the level we were talking about a moment ago, 110 below the key range low, 110 to 70 would be a plus 60 right there, and plus 60 over 110 would be about a 55% move. That's not bad. Not bad. So yeah, I'll mark those up later on, but the 20 points doesn't look bad at all, and it's right in line with the 110 target we were talking about down below. So that's NVIDIA. I know we spent a good amount of time on NVIDIA here today. I did also want to talk Meta. Meta's the next on the list here. I'm super impressed with Meta's strength. To hit 640, that's a wow factor, especially from, you know, the 2022 year where it lost 64 or 69% that year. And right there, I mentioned to the group in the trading room, this thing is trading 89 bucks. I said one day you're going to look up and you're not going to be able to believe that this thing was trading 89 bucks because this thing has rallied so much. And here's the day. You know, it was 89 when we talked about it that day, and it hit 640, trading 617 right now. That is a massive, massive move, and it has blown away all of our key levels at the time. This one I do have some key levels up here, some market structure levels. This one trades in 50-point increments. 50-point increments, so 440 here, 490 there, 540 here, 590 there, and 640 here, which means the next one up is 690. 690. So this one's trading in 50-point increments. Do I have the 690? I do. I have the 690 right there. And it does have a very nice key range right here to work with. So you have that impulse low to this impulse high back to the midpoint, and that tells us that this zone right there is the ideal entry point if you can be patient this quarter. That will take us back below the key range low, which is also the quarterly low. It bumps us into the rising 200-day moving average. From a pivot high here down to this low, that would represent a pretty decent pullback in terms of points. You know, this year's high 632, and if we hit 530, that's a 100-point pullback right there. That's not bad, and that could ultimately be a trap and reverse back to the high, and then into the next key range level above, or I guess that's a 50% key range level, but also the market structure level of 690. So anywhere between 530 and 540 for a reversal up to 690 could be the play ahead. And that's similar to what we've done before. For example, back here, you're up here near the upper end of market structure. Right here, we're here near the upper end of market structure. You look for a 1 and 2 distribution pullback, and on the pullback low, you're looking for a reversal back up within those two market structure distributions. And that's what this would be. We're here now. You drop 1 here, drop 2 there, you trap here, back up 1, back up 2, and then down the road, ideally, you bust through and make the next move. So 540 could be in play here for Meta to begin the year. Do we get a pullback of that magnitude? That's the big question here. Based off the selling pressure we've seen here today, especially in NVIDIA, maybe something like that does indeed play out, and that could be a great opportunity to bring it up the way down the road. So maybe as much as a plus 150 or 160 in this one for kind of a position trade type of move. The next one on the list here we're going to look at is Tesla. And of course the Magnificent 7 stocks, there's 7 of them. You know, you got the Apples, the Amazons, the Googles, Microsoft, and then you got the 3 that we're looking at here today. The others don't have as great levels here, or actionable levels. That's why we're only looking at these 3 right now. But if you want me to take a look at anything else, I can. This one right now has the potential to provide a double down the road, which is incredible because it just finished doubling and then some. 220, and then it hit 440 here. That's a double just in the last quarter. This is a significant short squeeze that we've talked about before, and that's kind of how this thing has lived lately on these massive short squeezes. This was one of the biggest short squeezes it had had in years, and then it bested it here and then here again. Bill Gates getting his lunch ate on this one here by continuously shorting this stock, and Musk continually I guess driving the knife here and killing the shorts. But with every move up, it tends to pull back a bit. It did miss its deliveries for the first time here ever, delivering less than 500,000 vehicles here in the recent period. So there could be a little bit of a pullback here. Now the play that could be ahead for this one, where it could provide a long-term double, so this is not just a Q1 play, but maybe a 2025 play if you like Tesla, is we have this key range that just developed here and hit yesterday. Impulse sell-off, bounce back, and it hit 420. So the high 463 or so, you have 420, and the low at 473. If you look down to the 100% target, that's 280. And 280 here is a market structure level, and it's the breakout level. And that breakout day was the day after Election Day, when Trump won the presidency. Elon aligned with Trump, and that was one of the things we talked about heading into it, that Elon could come out a winner. And since that day, it went from 280 to 488. Just tremendous. Now, it outperformed because on that day, we mentioned that was a transitional day and should take us to the next two market structure levels above. And that was 340 and 400. So we mentioned 400 could be an end of the year target on that day. And it went beyond it again, hitting 3 market structure distributions and beyond. So tremendous movement, but perhaps over rotated to the upside. And now maybe there's a shot for this thing to come clean it out back to 280. You never know. I know it started last year very heavy, so this is what it looked like at the beginning of last year. Selling pressure here, little pullback, selling pressure here. We mentioned at the beginning of the year, don't even touch this until it hits 160. Once it hits 160, that could be an opportunity to be in. It only got a little bit lower, and then earnings helped push this thing up. It was actually not even earnings. It was not good earnings there, but he pushed Robotaxi and China here, and that helped move it higher. Inverted head and shoulder pushed this thing up on a squeeze as well. So it has a precedent here for starting the year on a bearish note. That could be the same here. If you're patient, can we get back to 280? Now that would require some patience, but you never know with Tesla. It has a history of going in both directions, and when it's ready to squeeze, it can rip pretty hard. So 280 would be the level in the best case scenario. Best case scenario 280, and ultimately you may be at a 560 print, and that doubles down the road. Okay? Now, if you're looking for something a little short term, more short term oriented, 340. When price drops into 340, 340 could be a play to 420, and that's an 80-point move right there. That could be in play. Maybe a move into 460 right here. That would be 120 points. Is my math right on that? 340 to 460. Even more than, yeah, 120. So that could be in play right there. So if this thing can drop even into 340 here, 340 could be an opportunity to trap and reverse it back to 420. and you're looking at a pretty decent little move there. 420 being the midpoint of the key range here. And so that's an 80-point move, and then a continuation to 460 to the upside in the best case scenario. But that's your near-term trap opportunity. But from a long-term position basis, that's your level right here, 280. 280 is the level to watch. So the Magnificent 7 stocks, those are the three that could provide some decent opportunities here from kind of a medium and longer term basis up ahead as we begin the new year. Now we're gonna look at a few AI stocks right now. There's a ton of different AI stocks that you can look at. You know, NVIDIA is an AI play, and Palantir was one of our AI plays to begin last year. But something like Palantir has rallied so much, it's hard to get a good read on it right now on where a potential entry is. Especially over the last 2 quarters, this thing has gone bananas. It has gone 4x to the upside. It hit 20 here, and it hit 80 here. That's 4 times over the last 2 quarters. I would still say if you like Palantir, it's still one to be in. But for the purposes of this market outlook, it's hard to find a zone here that makes sense to be in right now as an actionable opportunity. But Palantir, great AI play, AI defense contractor, and starting to get into commercial as well. And this one heavily involved with CIA and all of that. So I mean, a lot of good things to like about this one with regards to having legs for bigger moves down the road. It's just hard to pinpoint an entry spot for this one right now. But AI, Palantir, probably one of the ones at the top of the list. I'll point you to AVGO. Another one here that's heavily AI chips. Now recently we had this one as a breakout candidate through 190 prior to earnings, and mentioned that this had a pretty good potential to break out before the end of the year. And it was mostly a weekly chart pattern that gave us that idea. You can see right here kind of this ascending wedge, massive strength over recent price action here, rallying from $50 to 190. And then building energy with an ascending profile here. And that's when I said this thing wants to bust higher big time. Earnings came around, and this thing exploded to the upside. Now, this is recent pricing here. This thing wasn't $50 back here. You can see right in here that was a 10-for-1 split. So this was trading, $1,700 or something. So you only wish you had it at $48, but no, it split 10-for-1 here, so this is new pricing. And this thing may not be done. So even though it's made this kind of a massive move to the upside, the gift of key ranges keep giving. And just from the gap low to the 2-day rally high and back, you have yourself a key range to work with here. And the upside target of that key range takes us north of 250 into 292. So 292 is the ultimate upside target here for this one. Upside target at 292 down the road. And as a short-term opportunity here, anything in this zone right here, call it 205 to 210, could give you an opportunity to fade this back to 250. You can see right here, that's the thin part of the profile, because there is no volume there, right? No volume at all, because it gapped through the area. That's a big time volume channel there. Do we have to auction through that channel and fill the gap at some point down the road? I don't know. I don't know if we get that type of pullback that deep. I think if you get anywhere, like I said, between 200 and 205, that could be ultimately a great opportunity to 250. So if you're patient for a 200 play, 200 to 250 would be a 25% move. That's a pretty solid return. but then you can hold on for a 292 play, and now you've rallied 92 points off that level, and that's closing in on a big time percentage gain from that starting point, almost 50% rally. So great key range here, well defined. You can see a clearly defined and developing D-shaped profile. This thing drops here below the key range low into the volume channel here, the low volume node, and that right there could provide a great opportunity across the range from a short-term perspective, and then there's a long-term hold up ahead as well. Now that's AVGO. That's kind of a quick and dirty. And the next one we're going to look at here is SoundHound. Yeah, you're right, Dwayne. You're right. There's a ton of AI choices. And so the theme of the first monthly outlook of the year is that we're looking at AI, obviously the Magnificent Seven, AI. Those are the big ones here. We got quantum we'll be looking at a little bit, and I picked a couple out. We'll look at a space stock. Space is still really big. Perhaps overextended in the near term, but very, very bullish. And then there's a nuclear as well, which we haven't even touched on. Those are massive industry groups here that could continue to pay dividends here this year. But in the AI space, what makes it so unique compared to, say, quantum or space or nuclear is that there's so many different types of AI stocks, and there's so many different ways that the AI is being utilized. In nuclear, you're basically nuclear-powered energy, right? In space, you're sending stuff into space, satellites or whatever. With AI, this one right here, for example, SoundHound, this one is based off of conversational AI that perhaps many different platforms will use, and you can see big time potential for this, right? When you're looking at something like ServeHound here, or is it ServeHound? Serve Robotics, that is. Combining the two. Serve Robotics, I mean, it's a tiny robot delivering stuff like Uber Eats or DoorDash. You look at AVGO, it's the chips for AI. So the many different ways to see AI play out in the market, and that's why I picked some different ones. That's why I didn't just go with the regulars. Palantir is a defense AI, so many different ways, and I think that makes it pretty cool. So AI is the big theme here for today. But you're right, SoundHound, a big one there. I know JD's done really, really well on this one already. Well done, JD. This one really, really rallied in December, though. I mean, it took the top off of this thing and just made a massive move to the upside. Now, we do have a key range here, so this is all about identifying opportunities in certain stocks and then finding reliable key ranges and reliable entry points with reliable targets for big potential rewards and perhaps even doubles. And this one epitomizes that. To the upside, based off of this impulse move in the key range, you have a 35 print. That's the target. 35.46 would be the upside target, so call it 35s. You reverse engineer 35 to the downside, that means cut it in half, and you get 17.5. So from 17.5, there could be a potential double down the road later on this year. I would prefer to wait for a better pullback and get a lower target for a double. And in this case, the key range low would be right here. That's your key range low. Can we get back to sub $12 levels? 12.70 is the key range low here. Maybe it can, maybe it can't. Again, you just never know how low they'll go. The other thing I like to do is, okay, if this is the high, and that high is about 25, that's the previous year's high is 25, then you can cut 25 in half. Cutting 25 in half gives you 12 half. That is tremendous to be able to come down here, touch the key range low at 12 half, and if you're patient and it can reverse back to the previous year's high and quarterly high, you got a free trade just to get back to that level. So 12 half right now is going to be very hard to beat as an entry point for this stock. Again, if we have a mature pullback in the broader market like we talked about before, you have this D shape here and that developing D shape. Can we get to $10? On a key range, that is your ambush entry. That's oftentimes your best entry point, is the S25, the 25% extension. That is about $10. Can this thing drop into about 10? If so, now you get to break even on the year and you've doubled. You get up to the 50% extension of the key range and you've tripled. And so forth here. As it goes to 35, you've got 350% return. So 10 to 1250. That's your entry point here for SoundHound for a potential rally up ahead. Again, you could definitely see the potential out of this one, the long-term application, the widespread adoption for something like this. What you don't maybe see coming is how is the market going to treat a stock like this that has already rallied 5 to 25 in just one quarter, in just 2 months. Does it punish it for a while, bring it back to $5 and stay here for the next 6 months and then make a move? You just never know. So I think this presents a really good opportunity to at least dip a toe and watch for the potential to double this thing back up. And then once you double, you can take that free trade opportunity and be free and clear and allow it to play out moving forward. So that's SoundHound here. The other one on the list here, Serve Robotics. This is similar. Again, robotic delivery. Kind of like an Uber Eats on wheels, DoorDash on wheels, that type of thing. This one, again, could provide an opportunity ahead. This is kind of robotics / AI, but a lot of robotics here. But this one has a great key range that just developed. And again, with an impulse move to the upside and a pushback to the mid, it's given us the key range to use for the year. Given us a key range for the year, and if we're patient for this thing to come down a bit, I mean, we're already 1860. Can we get down to $12 below the key range low? Can we get to the 25% extension, 1060? Right? A magnet for this level might be 19 here. So again, if the farther we drop down here, the more this thing may be able to bounce it back up and reclaim these prices. 24 is a double top high. It was last year's high and now it's this year's current high. So that's a 12 entry, 12 back to 24 long term. So this could be another play here where if you're just patient here, if we get that forthcoming sell-off over the course of the next 3 to 6 weeks, can we get a double out of a stock like this, take the risk off, and then allow it to play out moving forward? Again, for something like this that has rallied tremendously, we've seen this thing go 8 to 24. That's 4 times just in Q4 alone. That's a lot. So I would think that there's going to be some backfill and some devaluation of the price here. Can we get it back down toward $10, wipe out the initial rally here, and then start our way back up? So that's a great key range. That key range right here points us all the way up to 35. So again, on the earliest potential entry could be 1750, but how much pullback do we have to get before something like that starts to materialize? That's going to be a lot of the theme again that you're going to pull away from today. is there's some great candidates in here, but there's going to need to be a little bit of patience up ahead before some of those entry points are hit. But if those entry points are hit, there could be some big time returns down the road. NBIS right here. NBIS, this is a new AI stock here, new by way of the IPO. You can see it IPO'd here just in October. Their core business is basically AI-centric cloud platform that builds infrastructure for AI and other large-scale GPU clusters per their business summary here. So they build a bunch of AI cloud platform and tools and services for developers. This one, what I like about it is, again, it's in the AI space. It has a very good move after the IPO. Sometimes you'll see an IPO come out and then it crashes down here, leaves those early adopters holding the bag, and then it's, you know, relegated to the seller for a while before it turns around. But when an IPO can rally out of the gate and provide some good movement and market structure, that sets it apart in a big way. I believe this one also has an investor in NVIDIA. So NVIDIA also an investor, I believe, in SoundHound and some of these others. So you like to have a big backer in that way. Double distribution profile here, so you can kind of see the levels there, here, and a B shape there. And a massive key range right here to begin. Massive key range. It's already done some big time work. It's doubled from 18 up to 38s. More than doubled there. So this one is one to keep an eye on as a growth type of stock for the year. Now again, this is not the area to be in. I would say the earliest potential entry would be, can it fill the gap? Can it get down here to 20 bucks? And 20 bucks might be an opportunity to take it back toward the high. Better yet, can we get to the value low and drop into the $16 level? So again, there's going to need to be some patience here on some of these, but something south of $20. Something south of $20. We're at $31.50 right now. With something this new, you're going to want to let it play out a little bit and let price come to you. But there's a couple of spots on the chart, even from a swing basis. You know, that LVN right there around 25. 25 could be 34 as a swing move. You fell through 25 and you're dropping down towards 16 or maybe even lower, and that could provide an opportunity up the range as well. MBIS could be one to keep an eye on, especially with the backing of NVIDIA and some of the things that they do here as well. So that's kind of the AI group right there. I wanted to look at the space group. Now, we had a ton of great success with the space group last year. I mean, just look at ASTS here. We saw this thing rallying through $4 and had targets all the way out to about 14. And it blew through some of those targets and opened up a move all the way into 38, 39. I mean, it was ridiculous how much this thing rallied. ASTS, AST Space Mobile, they put satellites out into space, and that's a business that could continue to play out. There's also Rocket Lab. There's Intuitive Machines, which got a huge multi-billion-dollar contract from NASA. Redwire, RDW. Those are all very good space-based companies here that are doing really, really well. As a matter of fact, if you look at something like Rocket Lab right here, it's done so well lately. And again, this is another one that we had as a breakout candidate that could rally. Most recently, we had it as a swing buying opportunity right there for a move into 16. And it ended up going to 28. And that's off the $10 level. So These really outperformed in a big way, but again, hard to find an entry point right now unless you let it pull back quite a bit, maybe 20 bucks, maybe lower. So you can see how strong some of these has been in the space group. Here's Intuitive Machines, LUNR. This is the one that has NASA contract, and you can see the growth this one has had to 22s. But again, no real key range right now, no great spot for an entry just yet. Even 16 might be a little shallow, but that might be an opportunity from 16 to 32. Redwire is another one here. RDW as a space-based group stock, and you can see how well this one's done. But like the other two, not a great spot to kind of do business right now. On the other hand, AST Space Mobile does have an actionable opportunity up ahead, and a potential double could be in play for this one. But you need to break out your chisel here so that we can bust through the $21 level, because that has been significant support, massive support there. If it can break through this level, it opens up 14 down below, and that would be the bounce back point. That's the entry point, is 14. From 14 you come back to the breakdown point and up to recent resistance at 28, and that's your double. And from there, maybe a third distribution into 35 if you're lucky here, but maybe for all intents and purposes the key range high at 31. Now from a key range perspective, this thing has an upside target near 42s, and that's our next market structure level up. That's the 100% target to the upside. So we mentioned that before, right in here, that it's hitting 21s, and if you look out long term, we might get to that 42. But as of right now, can we get a move into 14? That would be below value, and into market structure. It'd be back to the breakout point, the origination breakout point from 14. And from 14 to 28 could be a very doable play for a free trade opportunity and some skin in the game in a space-based stock. So ASTS Space Mobile here, or AST Space Mobile, one of those space-based stocks. Rocket Lab, Intuitive Machines, Redwire, or a few of the others that we cover. Now in terms of Bitcoin miners or Bitcoin plays, I have a couple in here with some actionable opportunities here. I chose CleanSpark here. CleanSpark has done okay here lately. This was one of the ones we mentioned early last year could double, and it did that. Oh, that went off the wire there. It did double up to this zone. Really good movement here. Eventually it tapped out around 20 bucks and dropped. And then recently here we mentioned it could double again off the $9 level back up to 18, and it pretty much got there. So it's done some really good work here over the previous year. Very back and forth, and you really need Bitcoin to perform for something like this to work out. And if Bitcoin embarks on its next wave of strength, this one could play along very nicely. You've got to be patient with this one, but I would say 18 is still the target that's in play, and that's the key range high. You can see the key range low, key range high, key range mid. The key range low is 971. It just recently tested it and then squeezed. Maybe we can get a little bit lower. So the entry point on this one, $8 to $9, and I would say closer to $8. You know, $8 would take out 2 quarter lows. If this thing drops into $8 or goes $7.50 here, that could provide a great opportunity to trap below the key range, or below the quarterly low. And then you're back to the mid here at 13, and maybe you can squeeze it out across the range toward 18. But you don't even need to go that high if you're going to double off the $8 level. $7.50 to $8 gets you to 15 to 16 as a double, and you have an HVN right there at around 17. So that could be the opportunity up ahead for CleanSpark. Now, what I would say with these type of candidates, when you get that move, you got to take it. You got to take it. You got to get your free trade and move on and go risk-free, because there's a lot of back and forth that can happen in these stocks, especially if you're getting volatility in the crypto market. So this is kind of, again, one of those lottery type of plays. Some of these other stocks might be longer term growth stocks or big mainstays like an NVIDIA, but something like this you got to be a little more cautious with. If you get your 750 entry, as soon as you see 15s, take that free trade opportunity, and then from there you're working with house money. The next one on the list is MicroStrategy. Now, MicroStrategy's had tremendous movement. Obviously, look at this move here, 10-for-1 split, massive movement. This recent rally in Bitcoin was eclipsed by the movement here in MicroStrategy. I can't make sense of it all the time because, again, they're kind of a Bitcoin repository here. They own a ton. They're going to continue to own a ton. And anytime Bitcoin moves higher, this thing tends to shred to the upside in a big way. Now, we can use that, though. We can use that, and as a matter of fact here, you got a great key range right here, back to the midpoint, and the recent trap was perfect off that low. So that's a trap opportunity here that you can continue to likely work off of. But I would say if you're patient for more weakness, say NVIDIA leads us lower, say Bitcoin, Ethereum have a broader pullback, can we wait for kind of a gap fill here in about 260? Can this thing pull back to about 260? 260 would also be at the 25% extension of the key range, 262.52. If you can get 260 on the next massive wave up, you can work your way toward 500, more likely 440, right? That's a great target. Maybe this pivot high never gets hit. Maybe it does. 520 would be a double off the 260 level. But this right here, that zone could be a great opportunity short term and perhaps even down the way. The key range is a really good one out of this one, and you can already see the trap and reversal that's happened. As a matter of fact, as a short-term play here, you want to continue to watch that 320 level here. Maybe at higher lows and goes to 430, but I would love to see this thing drop a bit lower, and you get to 260 or so with the right amount of rejection. This thing could really pop. Now, if you're not a fan of MicroStrategy, of course, you're a good person here, because this one is hard to like all the time because it's just so perplexing. But the returns it gives you is tremendous at times. So if you can get in right at the right time, this thing could launch. So if you really have to be enticed off the mat for something like this, value at 200 could be the best way to go. Wait for year-to-date closing value on VWAP, the 200-day moving average. Those come into play at 200. That might be ultimately the best spot to be in, where, again, the last time you hit the 200-day moving average was right there. The time before that was right there, and those were both the lows before it rallied. So 200-day moving average might be the best scenario for this one, and that would take you to the 50% extension to the downside. That could be a great way to go. 200 and then flip this thing back toward 4. Very, very doable, even if it's a short-term move that gets you there. So that could be in play for MicroStrategy up ahead. Now, the last group we're going to talk about here is the quantum group. Quantum computing had the best December of anything we've seen, and the best Q4. Look at IonQ. This was our first quantum stock that we identified in our trading room. I pulled it out right in here as it was busting through $10 and $12, and thought, wow, it's already hit $17.50. As a lot of the move over, we were talking about the potential buy on the pullback here, and a couple days later, it's up like 60% or something, 45, 50%. It was up a tremendous amount, and from that day alone, the volatility profile completely changed for this one. Big time strength, IonQ. This is number one in the quantum computing space right now. The problem is it hit a new high today, 54.74, and it's run away from the $10 level. So from 10 to 54, and basically a quarter. That's bananas. Now what I do like about this one is today it did put in a strong high. And in the near term here, 46.60 is the target to reach as a short-term target. That's a midpoint retest target, and that will solidify this key range. And that key range right there would point us way up the range here into the 71 level. 71 will be the upside target for this one. And if you think that's way out there, it just went 10 to 54. What's another 15 points above the high, you know? So if you're looking at 70 it being hit, 35 is your back engineered entry. If you can be patient for a 35 entry, 70 could be the target up ahead for this one. 35 to 70 would be a double and a free trade opportunity. Again, I'm very interested to see how they treat quantum in Q1 because they had such tremendous growth here in the final quarter of the year. Last year, do they punish them a little bit first and then drive them back up? Or do they just keep driving this thing up without an entry point? And then people get FOMO and now you're left with horrible entries at these highs. So again, with something like this, I would be waiting on the sidelines here as of right now and seeing if we can get a 35 entry, or can we even get a test at the previous quarter's midpoint. That's about 28. 28 would be kind of a home run potential entry for this one as well. So the fact here is that we have ourselves a key range that's developing with 71 as the upside target. 35 half would be a free trade to 71. 35 here is kind of the 25% extension. Maybe we can get a bit lower. Be patient with this one, but this is the leader of the quantum group. QBTS is another one, and we can point to 5 or 6 other quantum stocks that all did the same thing. You know, this one went from $1 to $11. $1 to $11, way out there. Others went to like 90 bucks, you know, so this was tremendous movement. And it could be the beginning of what's a new quantum age ahead. Quantum plus AI, that's going to be huge, perhaps in the future. How far in the future? Is it 2 years, 5 years, 10 years? It's going to be the next major wave, quantum plus AI. That's going to be huge. But, you know, again, to be able to get a free trade in one of these or multiple of these and sit on those free trade opportunities here for the next multiple years could be huge return. Great key range right here. This one is still cheap, comparatively speaking. If you're going to be patient on IonQ, then this one makes sense to be patient as well. And I would say, can you get somewhere between 550 and 6? If you can get 550 here, 550 back to 11 where it just came from, that's your free trade. 550 back up, and you can see the D shape that's developing, and that's the epicenter of the LVN. Then there is that level right there. 550 back to 11. Based off of this key range, you have an upside target that takes you just shy of 20 up here. You're like 1730. 1730 as a 100% target. So if you go 550 here, you can have a free trade at 11, and by the time it gets to 16, you've doubled again, and you don't even have to get as high as that 17. So 550 could be a way to go on this. Again, this is an emerging group here. An emerging group, so it's not something where you bet the farm on, but it is something where if you get a little bit of exposure in some of these, you look up down the road, it could be fairly significant. So we're going to be looking at pullbacks in these. So be patient, let it come back to $5, $5.50, shoot, maybe even a little bit more. I'll go with QSI next as a lottery ticket play. As a lottery ticket play, this one is super cheap right now. Big time move to the upside here recently. And if you're not familiar here, Rigetti is another one. Again, Rigetti is probably a leader in quantum here. And again, I could reel off several of these names. RGTI here, Rigetti Computing. You can see what it's done lately. I whiffed on an entry at 750 here, and it went on to triple. So, yeah, that's the one I'm kicking myself on right there. But you can see how much strength that these have had lately, but there's just hard to find that entry. But Rigetti is a leader in this space. IonQ is a leader in this space, and then D-Wave, QBTS. So QSI here is not a leader in the space. It's a lottery ticket play. QSI is a lottery ticket play, and it has also developed a key range to begin the year, and that key range right there points us to $9 up ahead, 907. But for this one, if this thing can drop into the $2 to $2.50 zone, there's a shot to triple or even quadruple this one up ahead. Can we fill the gap here at about 215 or so? You know, can this thing drop a little bit lower and you get a $2 entry? Now you're working from $2. You can get back to 4 here, and that's a free trade. 6, 8, and so on, up to $9 later on this year at some point. So this one is a lottery ticket play. Again, I'm not advocating putting in significant, serious amounts of money in something like this. Whereas something like NVIDIA, yeah, if you like the idea earlier, that's where you can park some serious cash in something like NVIDIA for a major long-term move, not something like QSI. This one's still very highly speculative and a highly emerging group. That's why I'm calling it a lottery ticket play here. But again, you got a little bit of extra cash here. You want to play a lottery ticket style play somewhere between $2 and $2.50. Could get you to a quick free trade. And then from there, you might be surprised at kind of a momentum move that could emerge. We've already seen it play out in many of these other stocks. This one could be another one of those. But again, significant lottery play. Now, I'll end on QTUM because this is the Quantum ETF, Defiance Quantum ETF. And the Defiance Quantum ETF holds a ton of stocks, and the top 3 are Rigetti, D-Wave, and IonQ. So that's those are the top 3 that we just talked about. So if you want exposure to quantum but want to diversify it a little bit, this is the one to use. You can see in the last quarter this thing rallied 62 to 90. Really good move, especially for an ETF. And it also gave us a great key range in December. A great key range here. So if you want to work with the key range itself, the key range points you to 105.50. 105.50 as a downside or as an upside target down the road. And then you have an entry somewhere in here, call it 72 to 74. If this thing can drop into 72s, 72 to 90, and then 90 up to 105 could be kind of a long-term exposure to this one. And there's also options on this one as well. So that's the quantum group right there. I know we've covered a ton of different charts here today. I want to say thank you all very much for joining me for the first monthly market outlook of the year. And we're going to make this a routine. We're going to get back to doing this monthly as well. I know a lot of you have been asking for more of these. We got a little off schedule last year, but looking forward to touching base with these and maybe even putting these on a YouTube live stream as well the next time around. Again, a lot of great potential candidates, a lot of potential upside here down the road, but we got to be patient here for whatever pullback may come ahead. NVIDIA, strong day one high, Maybe we bounce back a little bit here up ahead, but it could lead to 3 to 6 weeks of a pullback in that stock, which could also drag down the broader market a bit. Those types of pullbacks could provide entry opportunities down the road, which could pay off in a big way. So be patient with these opportunities. Use the key ranges as a roadmap for Q1 and moving forward. Thank you all very, very much for joining me here today. We'll be back at it in the trading room tomorrow morning, and I'll see you soon. Take care.